Alrighty. Doc here from North America. Good morning, good afternoon, and good evening. Just another fun-filled day. It's Thursday, one day before TGIM. No, TGIF. TGIM is 4 days away. All right, let's see what we got going on today. As we can see on the J4X, we see the Swiss. We're showing you the dollar Swiss pairs trade to get a flavor, get an idea of what they're doing with the dollar at this point. With the world a little upset and some people doing wild and crazy things, we are basically, as you can see here, it's up a little bit today, nothing major. It's kind of stalled out now at the top end of the range of the last couple years. And as you can see here, we're all green on J4X, but you can see we have this white line starting to turn now and try to head back down again. We're not, I don't think there's any real clarity at this point, more than just our math. Our math seems to be telling us, we're flirting with a weekly buy right here. You can see on the Chicago quant side of things right there. And, at the same time, we're seeing the daily trying to roll over just like we're seeing it on the J4X. So, it's kind of, markets are kind of stalled, I guess you could say, waiting for the next shoe to drop. I don't know. What happens if they do send planes, Russian MiGs to the Ukraine and give them, competing, ability? Does that mean we see the dollar go up? Does it go down? No idea. Normally, when the world gets panicked, it goes that way. So that seems to be the answer to it all, is that right now the world is obviously in panic because the dollar is trading pretty firm against most currency pairs. We do see that the I think it was the euro has started to go into the daily buy. So obviously, maybe there's a little calm kicking out, but maybe at the same time the run to safety, why we're seeing a weaker Swiss against the dollar right now is because maybe they ran to it, or the concept with quantitative easing about trading inside these ranges has been kind of let's see. It has not confused me. I mean, we know that quantitative easing, the objective of it is, to begin with, was stability. That key word, stability. In other words, they wanted to see, equities not go to zero or fall apart, and they didn't want to see interest rates go to the roof, things like that. In other words, they wanted basic stability of the marketplace, and that was the objective. And that's what quantitative easing began with. But that's back in 2008. At this point, they've used it to create more debt. It was one thing to create the debt in 2009 and 2010 and 2011 and, start to pare it back. I mean, at that point, they had stabilized all the financial institutions that had gone bankrupt, and they had merged them. Merrill Lynch got merged with Bank of America, and Bear Stearns got merged with J.P. Morgan, and Wachovia. These are major institutions, got merged with Wells Fargo, and Citibank was so bad they couldn't find anybody to merge with that. They had to buy it itself, the Federal Reserve, just the same way that the German central bank for Germany itself took Deutsche Bank, because no one they tried to merge it with Commercial Bank in Germany, but it just didn't have the ability to take on the amount of debt that Deutsche Bank had. So, and we can go on. Lloyd's of London ended up being owned by the Exchequer, in London. I think HSBC, Barclays, and Bank of Scotland. Those three were kind of propped up the way we prop up Citibank and so forth. Owning a big bulk of the stock, and those stocks have never really come back. They're all trading at 85, 90% off their all-time highs, and so they really haven't seen any real growth. I mean, I think HSBC is probably one of the better ones, and I believe Barclays to some extent. But overall, the whole financial system collapsed, and the objective was stability. That was pretty much what it is. And that's why I guess they trade in these ranges now on the pairs trades. You can see them, they oscillate back and forth. We've even gotten to the point these last couple of years, we just Fibonacci it. Fibonacci the whole range and watch how it actually bounces off of them. And as you can see here, right there, you see the mouse on that? Let's see. Right here, there it is. You see where it bounces off the 50 percentile. We make the green the 50 percentile. There's the 100 percentile. It drifts across it every so often, but falls down, or hits it and falls down. But same thing on the bottom. When we go further back, we see the same type of action there too. It does the same exact thing. Bounces off the bottoms. So stability. I guess that's the answer to it all, is stability. And at this point in time, we're probably going to see, next week the Federal Reserve probably will raise interest rates a quarter. What that does to the range is going to be interesting to see. I think in many ways, the combination of inflation and interest rate change probably will have some effect, but they'll probably stay with the old ranges, and they'll just kind of like go a little bit higher, and then we'll see if we can see a change in the range itself. All right. From there, let's go over to the cable. Not the cable. I'm sorry. Let's go over to the euro and see what the euro is doing. And there it is right there. You can see 2 days of green. Our white line has been moving up for days. It's showing the strength. Let's do it over here. There it is right there. As you can see, same thing going on with the euro. You can see it went into the buy there yesterday. We didn't put a line in. We need to put a line in. And let's see, where's that line? Right there. We should put it in. Let's go put that line in. There we are. And there's the line right there. But our weekly, as you can see, is really pressed down. And blue line is turning up. You can see that right there. The green line is moving down still. So, and the histogram is moving down. So this could be just a move to this 0.23, and then maybe it'll oscillate inside here for a while until they can resolve the Ukraine chaos that's going on right now. Poor Ukraine, God bless them. And that's probably the way it's going to play out. We'll probably see the bottom end of the range here, just like we're seeing the top end of the range in the Swiss. Hey Robin, how you doing today? Take a sip of the tea there. All right. I guess, when looking at the euro, it also has been trapped in that range, and you can see it's bouncing off a really deep bottom. I mean, I think it's like a 4-year low. Let's see what we have over on J4X. Let's put it in a weekly and take a look at the last time it was down in this territory. 2019. 2000 right there. What is that? That is March of 2020. So it's basically a 2-year low we're playing with at this point. There's the low right there, but it's playing with that range, and then you can see that was, and then we did in 2017 we saw it break itself back down even further down below, and it's pretty much been the range, and then the top of the range has been holding on pretty well there. There's a lot of circumstances with the euro more than most of the other currency pairs, because the euro represents so much. You know, it represents, Italy, and it's representing Germany, and it's representing France, Spain. It represents a lot of countries now. So it's that united Europe, or the European Union, and so it's a little bit more choppier when it comes to its range. But overall, it has some great stability. And when you think, what's the difference between like 105 or 104 versus 107, 108? Not a lot. When something can move around like that, and then it gets stalled out up in the 120s. So, we figured that once the Ukraine situation is resolved, then we'll probably see a firmer euro again. It was trying to climb. It was at the top end of the range. You can see. Let's see, where's the range at? The 122s, right here. It was there in the middle of 2021. It had played back to the top of the range. And what's really beautiful about it all is how the Fibonacci sequence is really, really accurate with the range, which is really funny in its own right. All right, from there, there we go. Let's get that back in there too, like that. There we go. So that's what we're seeing here with the euro, and I don't really expect to see anything less until they resolve the Ukraine problem with Russia. Stop the invasion, I guess you could say. From there, we'll jump over to the cable. And there's cable. You see, we were. I think we've closed above the line. Just go see. I know it's not in a daily buy yet, but it was. It's above the line. That I do know. Right there. Yeah. So there it is, right there. It's above the line. We're getting a volatility signal of the red and the green. But again, the weekly looks to a great extent like the euro, except for, notice our super, the 5 super out of the 3, the gas line 3 itself, is still heading south, which is curious. You would think that might turn up by the end of the day today. I was wondering if they're going to run the jets through England. England has a tradition of being able to stand up to the bullies more than most of the other countries. So I'm wondering if they'll move those MiGs for the MiG planes that were given to Ukraine by Poland, move them over. Well, I'm glad. You said you missed the train this morning, huh? I hear you. Here in the States, we're going to go to daylight savings time going into this weekend. So let's see, it springs forward. So it will be 8:30. It'll be 8:46. No, where is it at now? 8:43 in the morning here in the States. Right now it's 7:43 for me, and for Robin it's 6:43. Sipping the tea again. So it should be interesting. Now, so there's a cable, and it's holding down a little bit more than the euro, which is kind of curious because they've raised the rates a couple times now, and that really excited the cable. And the cable seemed to show some real life, and then all of a sudden it just rolled over. So the bigger question is, why is it acting so weak? And it's at the bottom end of the range also. You see it there. There's the black line. Let's see if we can make that line a little bit thicker or something like that. Let's see. Does that do it? This is the one that probably does it. Yeah, there it is, right there. You can see the thick. It's playing with that bottom end of the range again. And we're curious about that, why it wants to do that, and it doesn't go take out the top end of the range of late, especially the last year or so. It seems like everything's good in England economically. So, and they've really, made a good change to opening up their economy. These are strange times. First, a pandemic that doesn't really have the teeth that everybody thought it would. They thought the pandemic was going to be something like the Spanish flu, and lose maybe 18 or 20% of the population of the Earth, and we've lost less than 1%, I think, overall. Not even 1%. It's even smaller than that. So, it's they shut the world economy down for a very nasty cold. That's pretty much what it came down to in the end. And then at the same time, now we have, Russia invading Ukraine. So it seems like there's like this push to disrupt the world every chance it gets. And the bigger question is, who's behind all that stuff? And it's time to get the tinfoil on when we try to figure that one out. All right, from there we'll jump over to the euro, euro Turkish lira. Usually we do the dollar Turkish lira, and we've noticed it's trading the top end of the range there. Looks like it's doing it again today. So let's take a look at that. And then we'll go over to the euro Turkish lira. Right there. I think it's banging against our rectangle. See that? Right there. It's just banging up against it. We'll see how long that lasts, if it starts to break down and come back down to the center of this move right there. I don't know if that's a liquidity problem or what, but it's a little surprising. I think it's got more to do with the Russian invasion. And then we go over and look at the real one I like, and that is the euro Turkish lira, which seems to be much more effective and informative when it comes to the marketplace, mainly because Europe and Turkey border each other, and they're partially into the European Union and so forth. So you can see here it's not as high up against the rectangle as the other, but it's pushing and it's going after that high there, which is curious. And we've moved into the weekly in that area there, and you can see here on J4X, it's doing the same thing. It's spiking itself up. Let's see if we can get that on there. There we are. There we go. So, we're seeing that pressure on the upside, which is nowhere near the insanity that we've seen with the Turkish lira. So, and who knows? Maybe they're going to move the jets through Turkey in the end. Right? Anything's possible. Mr. Aragon has been doing some really interesting strategic things, and it wouldn't surprise me if maybe they move the jets through Turkey in the end. Anything's possible with him. This is his door. If there's anybody who's going to benefit more out of this situation, it's obviously Turkey. Because if the Ukraine comes to a settlement with the Russian Federation, then and then they pull their troops back out of there, and Mr. Putin is able to walk away saying, well, I stopped them from joining NATO, and we have our buffer, and they are an independent country. They will have time to become a very powerful country, because they're going to join the European Union, and next thing you know, they'll have strong economics like Poland and Czech Republic and Slovakia and Hungary and so forth. They're all becoming, all the old Russian or the old Soviet blocs are acting, very healthy economies now that they're part of the European Union compared to, the old Soviet Union. And so, who benefits from that more than anybody else besides the people in Ukraine? Obviously, Turkey, because Russia has their backyard, and like Georgia and Chechnya and Azerbaijan and so forth. And if they fail totally, or let's say this, if they stalemate, if the Russians stalemate and don't basically, and they're not going to be allowed to just take the country over. It doesn't work that way. It's one thing to do that. It was hard enough for them to do it. I understand in Georgia, was it Georgia or Chechnya, where the leadership is still there. He tried to get rid of the leadership. He tried bombing the leadership, and they're still there to this day. And so he has an enclave, that he feels is protecting him. Well, what he's done is he's shown Russia's weakness by doing it this way. He'd been better off. He showed Russia's strength by taking those border areas and declaring them independent. If he had just stayed there, he wouldn't have any real problems. There would be the status quo. But by actually thinking that he was going to be allowed to take Ukraine without the Ukrainians fighting, and now it's 15 days. It's just not the math is just not there. So who benefits out of all that really in the end? Turkey. Iran to some extent, but Turkey more. And so who better to transfer old Russian MiGs to Ukraine than Turkey? And it gives the president of Turkey much more leverage, much more respect in the areas that he wants respect, in his neighboring countries, and he's part of NATO. And so, he's been buying equipment from Russia, and he flies, Phantoms. I mean, didn't they notice when Turkey shot down a Russian MiG in Syria? In the end result, didn't see Russia exactly turn around and try to attack Turkey. Seems like somehow or another the world has forgotten about all that. And maybe that's what we need to talk about more often here and wake up some people. That probably the best way of Poland doing is move those jets over to Turkey and let Turkey hand them over to Ukraine, and then let them figure it out. Hey, look, if he wants a fight, let him fight in the schoolyard. If Mr. Putin wants a fight let him fight in the schoolyard against Mr. Ukraine, and let it be. And we'll all stand and watch, and share items to help the ones that are the innocent. And we know Turkey's the innocent. Not Turkey. Ukraine is the innocent. So, just a thought there. Never really thought about it that way. But who benefits more than anybody else out of this whole thing? Turkey does. And who is Russia afraid of in many ways? Turkey, because they shot down some. I remember that they just a few years ago they shot down those the MiG in northern Syria, and we didn't see MiGs try to go muscle on Turkey because they know that the Phantoms will eat them alive. So anyhow, that's just realize that. See, that's what happens when we start talking about something. No one seems to have chimed in, but anybody that's listening is from that area. Who benefits? Turkey's benefiting from this more than anybody else. So, anyhow, let's jump over to, which we love looking at the Turkish Lira without a doubt. And we'll see. Maybe that's what that pressure is. Maybe it's the interest rate cut we know is coming. The interest rate increase of 0.25 percentage point. So maybe that's why we're seeing all the products kind of go to the top end of their ranges in the pairs trades. All right. Canada. Right there. Oh, look at that. Red. They're moving it down a little bit today. How about that? Because, boy, we've been really disappointed. Now oil's dropping, and what's Canada doing? It's gaining in value. Normally, the Canadian dollar usually follows the oil market, but it hasn't done that throughout this massive run. And you can see here, there's the Canadian, coming down and actually breaking, hit the top end of the range for a couple of days, and now it's breaking down again. And you can see our weekly is trying to turn up. It's funny to watch these things move back and forth. Let's get that weekly in there because it's in a weekly sell from last week, and now it's already flirting with the weekly buy. There we go. So that's unique in its own right. Is that the Canadian well, look, the world is the supply and demand of oil and so forth, and the strength of economies. That makes sense, but at the same time, I guess the fear of something really, really bad happening made a lot of money run towards the dollar. Okay. Even with Bozo and running the White House. Bozo the clown. They called it the clown car coming to Europe. Our vice president, she's a piece of work. I don't know if any of you has ever watched her talk, but oh my God, she is a freak out. They said the clown car is going. The media's been saying the clown car is going to Europe now, and and the younger clown is showing up. They really think they're circus creatures. All right, so there's Canadian, and from there, what we normally do is we take a quick look at the oil market, and then we go and look at the gold market. So there is oil right there. You can see it moved down yesterday, and now they're dancing a little bit, trying to pick it back up again. But overall, it's off from the 130-ish area down to yesterday about 103, I think it was, 103.63. So it's a $27 drop from high to low over a couple-day period. And we're seeing some strength move in there today. But that's probably more of, what do you call that, the short term. Remember, this is expiring in about a week, so there's a lot of demand. Now, let's go take a look at the back month right there. And it's also doing the same thing. So we are seeing a little bit more strength in there today. A little surprised because we slid into the daily sell. Obviously, the weekly is telling us that they're not throwing this out with the bathwater at this point anyway. So in other words, they're not getting rid of oil. Everybody's still going to hold on to it, and it is needed. Now let's take a look at, see, we'll go over to gold now and see what gold is doing. Because gold was moving down from yesterday's action. What in blazes is that? There is that. Something's wrong there. See if we can fix that real quick. Ah, I see what's going on. Alright. So, let's do this. View. Gotta do a reload. No, something's wrong there. Maybe we just close it and start over. Let's do this. Close that. And then let's open up something. I have to fix something there. And quote manager. And let's see. Crude oil. Edit. And as soon as we get this straightened out, load. Okay, so that seems fine. So what's its malfunction there? Let's open that up again. We had gold going there a little while ago. It was doing fine. The chart was working fine. Let's see what its issue is here. Let's open that again. All right. Still loading. Let's see. History, interactive, broker. History symbol. What's the problem here? History symbol not found. Why is it not found? There we go. Let's see if that does it. It's still not found. Did I delete the poor thing accidentally? Let's see. Let's double check. See if we deleted it. Huh. Seems to be there. Oh. Oh wait, that's crude. Where's gold? That's what the problem is. I deleted gold somehow. How about that? Let's go add it back into the system. Alright. File. New. Somehow or another I deleted the symbol. Go figure, huh? format. Has red wheat in there now. How cute. Let's see. Instrument. Add symbol. We'll get this figured out. There we are. GC. Technical difficulties. At least nobody's dropping bombs on my house. That's a good thing. Let's see right there. Add. There we go. Close. And GC again. There we are. It's almost like I have to close everything and start over again. Let me just double check now if it's in there. There it is. Alright, good. At least it's in there. And then let's just close this out. And what we're going to do is we're going to jump over to... let's see, what do we'll do? We'll go like this. We'll go to... Let me just double check copper and silver just to make sure that they're all right. Close that. And then let's open it up over here. Let's see. What do we do? We'll go like this. Little technical difficulties here. At least our currencies are right. I'm going to go over to the South African Rand. I'm going to see what that's doing, and we'll look at J4X and show you what gold is doing there instead. So there's J4X, and you can see we have a red going on here, and we see the pressure on gold. And so, and then when we have it over here too, we can show you this morning what we sent out. Right, where's it at? Right there. There we go. Let's do this. Let's move all this stuff down and move this up. Let's see, where's it at? Right there. And there's gold this morning. You can see the pressure went into a sell yesterday, and it was just moving up a little bit today. And we'll get that reloaded and figure out what the malfunction is there. But let's take a look at the South African Rand, because normally when gold is, gaining in value, the South African Rand normally goes down, and that's what it's doing now. Now, in this case here, it seems like, just like in oil, Canadian kind of all of a sudden, lowering itself. Maybe that's a stability thing. In other words, they're thinking, okay, the world's not coming to an end. And so at the same time, gold is, holding, as you can see right here, it's holding up pretty well over there. Not too bad. It's just a little bit changed or up for the day. Now let's see if we can reopen it right there. Let's see if we get it going. There we go. Now we're back to live. And you can see here, so get rid of that, and we'll move this up, and there it is right there live. And you can see it's moving up, and now what in blazes is that? What is that? That's a 9th, that's a 10th. Somehow or another, they've changed the data for that when we reloaded it. We'll have to fix that. But that is in a daily sell. And I think I accidentally deleted the contract somehow or another. Huh. All right, from there we go over to, let's see, we're looking at the South African Rand, so let's see what it looks like in our work at the same time. Where's it at? Right there. What did we do? We close the other? No. Cancel. There it is right there. And let's get the South African Rand up there. Right there. And as you can see, it is trying to move down, not as well as it did yesterday. That was yesterday. This is today. It's popped back up again. and gold is still firm. So you would think that this thing would be finding ways to go down. So we're going to see if they go challenge this low again. We're still in that weekly sell for, I don't know, a couple months now, since the mid of December, later mid part of December. Here we are in the early part of March, and we've been in a weekly sell since the basically the 16 area, and we've drifted down to the 15 area, but it's still awful tight relative to some of the action we've seen. As you see, it's gone down to 13.5, and it bounced up to I guess maybe that's a high. Let's take a look at it on J4X and see what the South African Rand looks like on a weekly basis. I thought they had it higher during the Zuma killing spree. It was kind of free. Yeah, there it is. Way up there. We got up in the 1920s. They started really selling the South African Rand during former President Zuma's aggressiveness. He pulled a Putin, I guess you could say. And to the point where unfortunately, there was a lot of casualties on the streets. A lot of people laying around, gone. Sad. All right, so with the South African Rand, we're seeing an attempt to move back down against the dollar. In other words, it gained strength against the dollar in this case, and we're still in that weekly sell for a while. So we keep on expecting with gold, maybe gold will stay around in this area for a while, and silver will stay around it. Just due to the uncertainty of everything that's been going on. All right, from there we'll go over and see if we're getting some quotes on the ruble here today. Let's see. They hadn't been trading the ruble for a couple of days here in the States now. Let's see what it has here. No, we're still not trading ruble. Let's see what J4X has. We'll put the daily up there too at the same time. They were starting to quote ruble yesterday, but they weren't trading ruble, I noticed. It's really hard to when I guess you can't get a hold of rubles. Yeah, see how it's grayed out like that? They're just showing a 102.32. And let me just get a quick quote off of the interbank market. Where's it at? Right there it is, right there. Right now we have the ruble trading at I just saw it. Where was it at? It's around here somewhere. There it is. 115.99. They settled it last night at 129 and change. It is down 10 points, from last night. So when we were doing the webinar yesterday, we were bouncing between the 115s and 116s. But by the end of the, going into the later part of the day here in the United States, they had gotten it back up into the 120s. But so basically, the ruble really is unchanged from yesterday in many ways. It was trading at this time yesterday right here, bouncing between the 115s and the 116s, the high 115s and the low 116s, and then, like I said, they pressured it and it moved up into the 20s. It bounced into the 23, 24, 25 area. I think at times when there's a panic to try to liquefy, exchange assets, we see some really wild discount in the ruble, and then they, to bring it back to the norm. So right now we were just 116.32. Now we're 116.41. Now we just traded 116.19. So now we just traded 116.38. Now we just traded 115.94, and now we're trading at 116.40. So it moves in good clumps now, the ruble. It's trading all very actively. Now it's stalled out. Now it's at like 116.40, then 42, then 45, then 40, then 42. Now 46.9, or 47 basically. Now 42 and a half. See, it's calmed down now. And then when someone needs it, or needs to make a real big trade, I guess a major trade, then the thing moves like almost a full point out of nowhere, just in one tick. Right now we're bouncing around in the 47 area, so it's 116.47. It's stalled out there, and now it's 43. Now it's 14. Now it's 43 again. Now it's 47. Yeah, so it's moving in large clumps. There's a lot of pressure on the product. All right. From the ruble, we'll go over to. I was talking to Robin about that today. I want to write something about the yen. Oh, look at that. Where's that? No, I guess is that today? I can't even tell if that's today. It just says March. That says March. Oh, that's March. Is that March 8th? Is that March 9th? So that's yesterday. Okay. Huh. Curious. Let's get the yen up there. There's the yen. We are flirting with going after that 5-year high. Let's get it up on the screen here. Right there. There's the 5-year high right there, and you can see we are now starting to flirt our way up to it. 116.19, almost 20 is the high today, and I think 35 basically 116.35 is a 5-year high. And you can see we're flirting with the weekly buy right there too at the same time. All right, over where we go from here. Let's go to the Mexican peso. See what they're doing. You would think that would be gaining in value because of they're an oil country, and you would think that the demand for oil is so great right now that you would think that they would be benefiting from it, and people would be rushing in and buying Mexican pesos. It doesn't look that way as much as you would think. Again, a lot of fundamentals get thrown out the window with quantitative easing. Janos had done some webinars trying to show how you trade fundamental data in the quantitative easing era. Yeah, look at that. Now it's parked itself back down at the top end of the range. That's interesting. Yesterday it slammed it all the way down to the close, which was the top end of the range. So it stepped out of the range again, like here. So the Mexican peso just is just holding up pretty well. It's not the worst case scenario. It's bouncing between basically the 19s and low 20s, 21s. I'm sorry, low 21s. So not too bad. And it is an oil nation, so you would think that, like I said, that you would think that people would be running towards it, because obviously black gold. That's what it really is at this point. It's black gold. All right. So that pretty much completes the pairs trades. Now we'll go over and we'll look a little bit closer to the metals market, and then we'll go take a look at the energy sector, the black gold. All right, so there is silver. You see silver's trying to be a little firmer. On here we got the red hinky at the moment. We did go in a daily sell yesterday in the silver market. Right there, and we are up a little bit now, but we have the red dots just like we have the one red hinky bar, and we're in a second day of the sell. But again, you can't take the short solely because why, traders? We're in a weekly buy. Doesn't even look like it wants to go down. So again, that uncertainty in the world, and the metals have been the place to run too. Next one we'll take a look at is copper, and there's copper. You can see that right there. It's been in the sell for a few days, and you can see the pressure, but the weekly is holding up pretty firm in here. And this wild woolly situation where the London exchange got shut made it even look wilder on our charts. Let's check it out over here. There is copper. Now it's got 3 days of the red hinkies, and the white line is broken down, so it's showing the same weakness on the daily basis as our chart is. And see what else. I mean, I don't think the London Exchange has opened again. I saw this morning J.P. Morgan is bailing out the Chinese traders that lost billions in the marketplace, or got margin. What happens? They got margined out, and they stopped the market. They actually just stopped the exchange market until they get that all settled. So in other words, they lost billions, but they don't want them to go out of business. So the London Exchange closed so that they don't make the brokers go out of business, because then all of a sudden when it reopens again, if they, I mean, they lost billions. So at this point, the best thing for them to do is stay in business like quantitative easing does, and let them earn their way and pay their way back. And I'm going to take a sip of tea here, but with the way quantitative easing is, what stops them from holding up the metals market too? We know they flirt with the gold market. We hear analysts constantly, saying, why won't the Federal Reserve buy gold? Well, that's because they want their currencies to be more valuable than the metal itself. So, also, that was a scare tactic. When not scare tactic, but they're defending against a scare tactic, and that is that when money managers see gold going through the roof, running really big and up to all-time highs, that scares the money managers, and their objective is stability. QE is the synonymous with the word stability, and so since they're fighting for stability, the last thing they want to do is scare money managers. So why would you let metals rally naturally? You got to hold them back. All right, that's why you couldn't take delivery of it for, I don't know, 5 or 6 years. You just couldn't even take delivery. They froze the market so much to keep it down. All right, from there we'll take a look at the Turkish, not the Turkish. I'm sorry, the platinum. Let's go to platinum real quick. I like that idea. Send the Polish planes to Turkey, and let Turkey hand them over. They'll hand them over. They have nothing to lose. They only have, this whole situation's in their favor. All right, so right there you can see the platinum a little bit under for the day. It's about $100 down from where it got to no more than 2 days ago. And you can see we're in a sell for a third day. And you can see the weekly and just kind of tightening up, but still not in the sell. Now we'll go over to the oil again. There's the front month up. And then let's show you what the back month is doing. We showed you a little while ago. Back month was doing the same thing. It's also up, but it's only up like it closed at yesterday at basically 101. And it's trading at 104.75, so it's up basically 3 3/4, which is not too bad. And then let's take a look over on J4X. And let's take a look at the Brent right there. And you can see the pressure is moving down there. Same thing. Now that's curious. We don't have a Brent chart, but I wonder if Brent is really up for the day. This is just the hinkies being the hinkies. But you can see the selling going on just like ours is going on over here. We are in a daily sell. It's pressing down. And this is doing the same exact thing right there. Let's take a look at European natural gas. Well, let's see what the U.S. natural gas is doing this morning. Last I saw it was flat. There it is right there. That makes it look like it might be up when they show you the high-low close bar. And then let's see what it is here. Let's see if it is up. Yeah, it's up a little bit. Nothing major. And this is getting ready to expire too. I need to change contracts very soon. Let's see what we got. You can see the weekly is not giving up at all. Right there. It's just staying very, very firm. And then let's take a look at European gas. European gas is right there. Trading in the 24s. It's been bouncing between the 22s and 24s. We're at the top end of its range. I'm glad to see it not, it was trading at 31, 32 a little while back, about 3 or 4 weeks ago. So I guess a combination of spring coming around the corner and weather getting a little bit better and and so forth. I would imagine that's part of the process at this point. We'll start to see, the energy market freaked out pretty much at the end of the winter. Thank goodness he didn't invade in December or November. Boy, that would have been really disastrous because of all the heating oil and everything that's necessary that time of the year. But instead, he invaded, here at the end of the season. So it is warming up in some places. I mean, we were 80. Let's see, 80 degrees Fahrenheit here, just no more than 4 or 5 days ago. And then now we're hanging out in the 50s and the 60s and the 40s. But what is that in Celsius? Let me think. Celsius, so 32 minus 80 is 38. Is it 48? 48. So 48. So it was like about 22 degrees Celsius here. Not too bad. And today, we're at like 2 Celsius, 1 Celsius, and we're going to go all the way up to about 8 or 9 Celsius. So, that's helping out here, and I'm sure it's doing the same thing in Europe. Now, let's take a look at, let's see, where did we do? Oh, that's the natural gas. Okay, yeah, so you can see, there's just a whole different game going on there. It's trading at 24 and change. And here in the States, we're trading at, was that 459? That's 459? Yeah, almost 460. 4.6 a unit. And in Europe, it's trading at 24.6 a unit. So it's like almost 10 times, is it 10 times? 8 times? 8 times 4 is 36. No, 7 times is 28. So it's like 6 times more in value. 6 times is 24. Yeah, so we're seeing European natural gas trade 6 times more expensive. 6 times, not just 6 points. 6 times. It's a demonstratively big number. Crank up those nuclear power plants, guys and gals. It's clean energy. Let's put it this way. It's the cleanest, less polluting energy we have out there. All right, from there, that completes basically looking at. Oh, let's look at one more thing I want to look at, and that is soy beans. We're seeing in the grains things have calmed down. Let's just put their soy beans right there on J4X. You can see they've been very firm. Let's see, let's go like here, right there. And here it comes. Let's see what soybeans look like here. There's oats. They've been moving down for weeks. I mean, literally weeks from all-time highs. And then there's soybeans right there. We're moving up towards the high of like the last couple weeks. Our daily is obviously having problems, but I bet over in J4X it's probably aiming up because of all the green hinky movement, and at the same time, yeah, there we go. It's doing the same thing. It's trying to move back up again. So it's trying to join in. It started to move up, then failed, and now it's trying to join in that move again. And wheat, Ukraine is like considered like the wheat basket, right? So we took out all-time, or I think they're all-time highs, the $13 a bushel area, and now we're in the high 11s. And we're in a daily sell from here, and it's sloppy, but you can see our weekly is firm, so you can't really rush towards those things right now thinking, okay, I can, it's over with. I don't think anything's over with until the fat lady sings, as they would say. All right, from there, we're going to take a quick look at the stock indices, and then from the stock indices, we will basically call it a day. All right, and so right there is the Tech 100. That's on Dukascopy, and it was fighting to be plus. You see, we had a volatility signal yesterday, and now they're knocking it back down again today. We'll see how it goes. I mean, it's only 300. What's it? How much is it down? Let's see. Let's see. It's down 194 points. Okay, that's not too bad. Then let's take a look at Oh, let's put it up on J4X real quick. Right there. Trying to bounce back up too. With that today, and it's kind of lagging. This lags our math. If anybody sees any math that's better than mine, please show me. I'd love to use something better than mine and mine. That could even make it more profitable. I can move past the 8.5 to 9.5 times accurate out of 10, that type of thing. All right, and from there we jump over to the S&P 500, and you can see there, product is down 46 points. And let's see what it looks like right there. Doing the same thing. It didn't get into the buy as well, or didn't try to climb into the buy yesterday as the NASDAQ 100, the Tech 100. But you can see it's in that weekly sell, and it's still feeling the pressure. And then that's what, Monday, Tuesday, Wednesday, Thursday. But look at that. Now today, this is a futures contract. So today is the big switch. So they're going to move today. They're going to move away from the March contract to the June contract. So we'll be trying to get that pretty much straightened out also. And then last but not least, we'll take a look at the Dow 30. And there it is right there. The Dow 30 is down 370 points, which is not that bad. It's about a 1.25 percentage point drop, if at that much. And then you can see it right there on the futures contract. It's moving down and was flirting with a weekly buy on the Monday, Tuesday with this action, but it's rolled over again. So we'll have to sit and see, watch the way it plays. Today is Thursday. Tomorrow's TGIF, so we'll see what they do. Remember, by the end of the, being down 1% during a trading day in this era doesn't mean anything. It can be up 1% by the end of the day. It's nothing whatsoever. Forget about end of the day. They could do it in like half hour. The markets are that thin and they move that fast. All right, traders, catch you all tomorrow. Tomorrow's TGIF. So happy trails to you until we meet again. Happy trails to you, to all our Dukascopy trading friends. Catch yous tomorrow on TGIF, traders.